Broadcast is now starting. All attendees are in listen-only mode.
Welcome traders to today's presentation on how you can finally achieve that consistency that you've been wanting in your trading from entry to exit every time, total reliability, and what it takes is a true mechanical trading system. And that's what you're going to need to cash in on the markets reaching new highs nearly every day during this current economic explosion. Even with COVID still going through yet another wave, the markets are still climbing and you need to take advantage of that. But you can't do it with subjective discretionary trading. I know a lot of you have been using what you think are systems. You think maybe just the right indicator is going to do it. I'm going to show you tonight what a true mechanical trading system really is constructed with and how easy it is to achieve those consistent winning results. I want to thank you again for being here. My name's Michael Guess, and this is me right here. And I'm the president and CEO of TradeSafe. And I want to let you know what you can depend on this evening, what you are going to get. So first of all, we know even though we got lots more work to do with COVID, the economy itself is still thriving. And you want to be able to take advantage of that. And what I'm going to be showing you is another tool in your trading toolbox. I'm not telling you to give up anything you think is working right now, but I'm going to introduce you to another tool that you may make your main tool, or it may just be a complementary one to what you're already doing. All right? But there is a lot of pent-up spending pressure, and people are out there buying. Home prices are going up constantly. A lot of you know that. And of course, you want to be able to take advantage. Take advantage of these big trading opportunities. So this is me. Why am I qualified to do this evening? Well, I've been a professional day trader for close to 30 years. And I started TradeSafe about 20 some years ago, and I've graduated over 4,000 students. I've created a host of custom indicators, and I've created a slew of mechanical trading systems. But I'm just going to share one with you, and this is our primary trading system. And by the way, before I became a trader, I was a psychotherapist. So I'm going to bring that to the table also, so that if you decide to go with TradeSafe, I want you to know that we're going to also address the trading psychology, the discipline side of trading. That is part and parcel of what's included in the entire TradeSafe package. It's not just a piece of software. This is a comprehensive solution to achieving consistency. Now, hopefully you don't have to leave early. If you do, or if you would like to at least review what we're covering here this evening, maybe this is your first time. I know some people come back more than once because they want to see maybe something they might have missed. Well, guess what? It's recorded each and every time, and you're going to get a link to that recording in a follow-up email that should go out tomorrow morning. So keep an eye out for that. And as a thank you from me for registering, even if you couldn't make it and you're just watching the replay, I'm giving you a link to a free TradeSafe ebook that goes into a lot of the details of how you can duplicate what's in the TradeSafe system. Also in those follow-up emails, you're going to have a link to how you can get a lot more questions answered. Before we go any further, I want to know that you can ask a question. So would you do me a favor? Let me know that you can see and hear what I'm doing by looking in that top right corner of your main monitor, and you'll see the GoToWebinar control panel. It's a little vertical strip with a few buttons. The topmost button, if I'm not mistaken, is yellow with a left pointing arrow. If you'll click just one time, it'll open up a hidden window. Click inside that window and just type something and click send to let me know There you go. I'm already getting responses. That's great. Wonderful, wonderful. Okay, this is how you can ask me questions, and you can do it anytime you want. I don't mind, but I know that a lot of people don't feel they get enough of what they wanted out of my answers. Maybe you didn't get a chance to even ask me a question, or we ran out of time. Whatever the reason is, I want you to know that you can actually just have a nice, relaxed conversation with me. It will not be a sales call. I don't do that. I'll just answer your questions, and I'll make sure that by the end of that call, you'll know whether or not Trade Safe is the right thing for you. And I'll be more than happy to help you diagnose any problems you might have with your trading. So do take advantage of it. That link that you will get in one of those emails is going to take you to an online calendar that shows you my schedule. Pick a date and time that works for you and schedule it. And we'll go into that more at the end of the presentation. Now, before we dive right in and get into the meat of this, I'm not going to read all of this boilerplate, but I will tell you just a couple of things real quick. The FTC, the Federal Trade Commission, they run the internet, and they have this regulation that says, you are not allowed to make a promise or a guarantee in anything you do. And I know a lot of things you watch about trading. They promise this and they promise that, and they offer guarantees, and they're violating the regulation. I'm not going to do that. But what I will do is I'm going to share with you so much information that you will know precisely how successful you can expect to be. Okay? The other thing is, of course, if you're a real brand new trader, please don't trade with money you can't afford to lose, okay? Goes without saying. Now that we've done that, let's get started. So what are we going to cover in this presentation? First of all, I want you to know that there's a lot of different ways to make money in the market. And I'm going to show you one tool that will give you what I believe is the best results you've probably ever gotten. And I'm also going to show you, especially if you're new to trading or you just don't have a very big account and you'd really like to make some bigger money than you are in right now, can you do it with a small account? Absolutely. The Trade Safe system will let you start with a very small account. And I'll show you exactly how you can do that. Now, almost every trader has at one point or another, especially when they started out learning, they had some doubts about, is this really exactly the best place to enter? Am I following the rules right? Or the written explanation or the video I watched on YouTube? Okay. Oh, those YouTube videos, they're so useless. Getting in and getting out needs to be completely precise. In fact, ideally, it needs to be totally mechanical with Boolean logic precision, and ideally, it should be automated. Now, the TradeSafe system is not a totally automated system. You still have full control, and you can choose whether you want to actually enter the trade or not. But going into the trade, you'll know everything precisely, whether the conditions are met or not. No shades of gray. It's black and white. And once you're in the trade, you will see full automation take over and manage and exit your trade and give you the best possible results. And a lot of us don't like losing. Of course we don't. But if you do lose, which hopefully will be occasionally, you want to make sure it's as small as possible. And I'm going to share with you how very, very small the risk is for the Trade Safe system. It's much smaller than you might think. And I will, with real charts, and I will show you an actual trade, walk you through step by step the precision 4-step entry to getting into a trade safe trade. It's really drop dead simple. And then of course you'll see the automation take over once we are in the trade. All this adds up to what my own graduated students have achieved, nearly 90% accuracy. You may say, oh, that's hype. It is not. This is not hypothetical backtesting kind of stuff. These are my own graduates with their own trades, achieving. No student has ever, out of the last 4 or 5 years now, achieved less than 87% winning accuracy. So if you would like to duplicate that, keep watching. Now, a lot of people know what I do. I'm a day trader. And you may say, oh, well, I don't want to day trade. You know, I don't have time for it. I got a job, or I've tried it, or who wants to sit on their butt all day long? I want you to know that it's actually a possibility. That's why I want you to talk to me. Because if you do have a job, it doesn't necessarily disqualify you. I've had people working actual full-time jobs learn this system and still be able to use the trade safe system and make money. And for those who do have some time, I want you to know you don't need to sit on your butt and get hemorrhoids and eye strain. You can do part-time trading and still make a decent income. And I'll show you exactly what you can reasonably depend on, so you don't have to stay glued to that screen all day long. So yeah, part-time trading is really possible. How? Why? Well, see that camcorder over there? Well, instead of a regular scene, I've got 3 charts, actually several charts, but I want you to know that it's the lens on that camera that gives you a zoom lens effect. It starts out with a wide angle and it zooms in closer and closer. Well, you can do the same thing with your chart settings, time frames as they're called. With a larger chart setting, intraday, you will be able to see what the market is capable of giving you for at least half the day, maybe the full day, trend-wise. And as you zoom in more, you'll get closer and closer to finally that what I call the low-risk surgical entry. You're up real close with a very small setting so that your risk is really, really small. And that way, you will be able to go with the big trend. And I'm going to show you that it's not just any big chart setting from some drop-down menu. I'm going to show you a formula that you can use yourself, and you'll be able to play with it when you leave this webinar. You'll be able to go try it out yourself. So the key here is zooming out and zooming in using chart settings. That's the first thing that we want you to know. This is what allows you to adapt to what the market can give you. This will make much more sense in about 10 minutes. So how do we do this? What do we do to achieve these special settings? Well, it's all based on ratios. As you can see, I've got 3 charts. It's the same market, just different magnification, so to speak. It's a higher setting one on the left-hand chart, and it's in a downtrend, and you zoom in 300%, and you've got the middle chart, which is what's called the dominant cycle. And then when you want to take a trade, you zoom in another 300%, and that's your low-risk surgical entry setting. And I'm going to show you how to do that, because if you try to do your trading with just one chart, that's not going to work. Stay away from a one-size-fits-all approach. You need to be able to have a custom-tailored approach based on the market you're trading, because these markets are not identical. They have personalities just like you and I are different. And I'm going to show you a formula so that you can calculate the settings for whatever market you are going to trade. So this will enable you to anticipate what the market is capable of giving based on not just the trend, but the strength of the trend. If it's a weak trend, it's kind of baseball season right now, you would bunt and get on base. If it's a strong trend, you'd swing for the fences. It'd be a home run. I'll show you exactly how to choose the way to manage and exit your trades based on the strength of the trend. And so with ratios, you can do this. Now, there are over 12,000 stocks out there. There are ETFs, there's Forex, there's futures and commodities. My goodness, it's almost an infinite array of markets you can trade with this system. It is not just built for one particular kind of market. So some people get the mistaken idea, oh, you showed me some futures or commodity stuff, and I trade stocks. Will it work on stocks? Of course it will. But I'm going to share with you what are called the minis. The minis are simply the indexes, the S&P, the Dow, the NASDAQ, and the Russell. Many people love to trade them. There's plenty of volume and they trend. That's the important key element. Their personality, like currencies, for example, is they trend. Okay? So what you want to do is pick a market, first of all, that trends. For example, crude oil doesn't trend. It tends to congest and occasionally break out, but it often fakes out and goes back into congestion, and then you got stopped out. Gold is another one that has that same personality. I know they're popular, but they don't trend easily. So you want to be able to pick your battles. So let's come back to these minis. How do you get these settings? Well, you want to be able to figure out how many minutes there are in a daytime trading session. Sure, you could use the drop-down menu and choose daily chart, but it's actually not going to be accurate. Believe it or not, you want to build it from raw minutes because we're going to step you down to smaller and smaller settings. So from the open in Chicago, when the minis open, that's 8:30 Central Time. If you're on the East Coast, a lot of people think East Coast time, it's 9:30, of course, all the way until the close. Now, that close was at 3:15 every afternoon for decades and decades. Recently, they changed it to 4 o'clock. But you know what? I found out that this isn't going to change the settings that I'm giving you tonight for the minis. It still works superbly, but I do want you for other markets to go through this example. So if you subtract the open from the close in terms of minutes, that's 405 minutes. There is your master number that you begin with. Now you want to do a countdown. You want to pick the next smallest number, next smallest integer that divides into it without a leftover or a remainder. That's a 135-minute chart setting, way too big for day trading. And the next biggest one is 81 minute. Still way too big for day trading. And you're not even going to find these in a drop-down menu choice, I promise you. But if you keep going and you maintain that 300% or 3-to-1 ratio, you're going to end up with from 135, 81, 27 is 1/3 of 81. And it also, of course, divides into 405. Now, a 27-minute chart, still too big for day trading, is actually a much more accurate chart if you happen to be swing trading, by the way, than a simple 30-minute chart if you're going to be doing this with the minis. It's much more accurate. But we're not done. We want to keep going with smaller and smaller multiples, like keeping that 3-to-1 ratio. So what's 1/3 of 27 and so on and so on? It's 9, 3, and 1. Your wide angle view of the market is a 9-minute chart. Your dominant cycle is your 3-minute chart. And when you really want the lowest possible risk for surgical entry, as I call it, it's a 1-minute chart. So you've kept that 3-to-1 ratio. You got the wide angle view of the market. You know what the trend is for at least half, maybe the whole day. That's the 9-minute chart. The 3-minute chart gives you about an hour or two worth of possible trending direction. And of course, the 1-minute is what you home in on when you are looking for your trade itself. But first, you got to find out something called trend agreement. And I'll get to that in a few more minutes. However, that 1-minute chart, I have found out in recent months, particularly because of COVID and a few other economic factors, the markets have gotten extraordinarily volatile. That means the order flow is really fast and you're going to see a lot more orders placed in 1 minute of time than you normally would see. And that tends to increase the size of an average 1-minute bar. It's ATR, or average true range. So that tends to put it over the risk levels that are our maximum for the trade safe system. And I'll tell you what those are in a few more minutes. So what do? Just don't get to take a trade? No. We've also included tick charts. And I'm not going to go into what tick charts are. I don't have time for that tonight. But instead of time and price, think about it more like how many trades and price. All right. And then when that number of trades have finished, then that bar is finished. So it has no element of time in it. And tick charts are much smoother, much easier. Plus, the advantage of a tick chart is if you have the correct setting, you will get far more opportunities for entries than you will on a 1-minute chart. So they are what I call supplemental to the 1-minute chart for entries. So how many trades do we get each day on average? A lot of people ask me that basic question. Of course, it depends on the market. But trading the minis, I have seen day in and day out, at least for a single market. We're not even talking if you're following all of the minis at once. A single market, at least 6 to 8 setups a day. Typically a lot more than that. And if you're following multiple markets, like all of the minis, or at least my favorite 3 are the NASDAQ, the Russell, and the Dow, those 3 are going to produce more setups, more entries than you can possibly keep up with. That's right. So you have just learned how to calculate the correct settings for your basic 3 charts. This is what gets you started. Now, I need a little bit of feedback. Would you simply type a yes if you understand how I got you this far? Does this make sense to you? And if you don't understand, just type out a quick question. Give me a little bit of feedback here. Okay, yeah. So I'm glad that does make sense to you. So a lot of people are saying, well, this is great. I understand this is a trend following system. But Michael, I get caught in chop and congestion a lot. And will your system keep me out of trouble? Because I sure don't want to be trading when I'm not supposed to. Absolutely. When you see that screenshot at the bottom there, the price bars are going up, down, and then back up. Now, a lot of people think, oh, trends are higher highs, higher lows, and that sort of thing. And of course, that is really a horrible way to define a trend because it is open to so much interpretation, misinterpretation, actually. You really need an actual trend indicator to determine trend. And if you look at the bottom of that screenshot, you'll see some colors in the subgraph. It's green for an uptrend, and then it went sideways for a little bit. And there are rules, an algorithm that actually calculates when it has fulfilled the conditions for actual congestion. And then it went blank for a while. And then it went down and broke out of that congestion pattern, which has got a visible rectangle around it to kind of give you an idea of the top and bottom of the range, if you will. And it went into a downtrend for at least a few bars. And that's when it was that salmon pink color. But then it went right back inside of congestion and it lost the trend and it's blank down below again. And then when it broke out of the top side and kept right on going, it turned green. So you are going to get actual visible alerts on your chart. And it's on every chart, even if you've got it hidden. You may say, well, I can't see my hidden charts. Maybe I'm looking at the Dow and the Russell has suddenly had some change of trend. How will I know it if I've hidden that? Because I don't want to try to look at everything all at once, because multitasking really doesn't work, folks. Please don't try to do more than 3 or 4 things at a time. Multitasking is a surefire way to overload your brain. And I'm speaking as a pharmacotherapist who has a background in neurophysiology. So coming back to how do you know if you're not watching? You get audible alerts. Your computer will actually talk to you in plain English. It'll say something like NASDAQ breakout confirmed. Or if it's already in a trend and it reverses to a trend in the other direction, it might say NASDAQ 3-minute trend change, and so on and so forth. There's a whole host of different audible spoken alerts that will let you know if you've got a trend, if you're in congestion, if you're breaking out, faking out, and so forth. And it'll identify which market and it'll identify which chart that's happening on, so that if you've been watching maybe 2 or 3 markets and none of them have the conditions you want for a trade and you don't want to sit and watch paint dry, right? You go in the kitchen, maybe fix a sandwich. If your speakers are turned up, You will hear it let you know when you've got a trend. Then you can come back and sit down and pay more attention. That's how you can actually achieve some part-time trading instead of sitting there getting hemorrhoids. So you'll be told when there is an actual breakout, fake out, and so on and so forth. And all of this is automated. I don't care which market and which chart, whether it's visible or it's hidden, it will update automatically all by itself. You don't have to lift a finger. So, two tick charts, Tom. I didn't see what you had typed earlier. About 4 minutes ago, Tom asked me how many tick charts are included. When I take you to the actual live charts, you will actually get to see them. Okay, Tom? And feel free to ask questions again. Now, all of this is adding up to, you know, when you have the best conditions to start looking for a trade. But you know what? Beginners focus way too much on the entry. I know it's important. You want to get into a trade the right way at the right time. And with this system, it's just drop dead simple. But professionals focus far more on the exits. Now, if you look at that screenshot there on the right, you see where you would have gotten into a trade after its setup bar right here. You would have entered just above its high. I'll show you how it's done when we do go to the charts. I want you to know that we have different exit strategies. Just like we don't try to use one chart to determine strength of trend, we use multiple charts. The same thing is true for exiting your trades. Your automated exit strategies, plural, are multiple because you don't want a one-size-fits-all approach. And I'll show you why and how you do that. The example I'm showing here is from where you would use what is called a scaling out exit strategy. You would have entered a tick above this bar's high. You would have exited half of your position probably right about there. Obviously, the automation will take care of it. And then this trailing stop indicator will auto adjust itself and your stop will trail with it. And it'll adjust itself away from the market if it needs to give more breathing room. And if the market starts to flatten out or maybe backfill like it's doing right here, you'll see this trailing stop indicator adjust itself closer and closer to the market so that the market will actually take you out of the trade. You don't need to guess where to get out. You don't need to say, oh, I'll get out at Fibonacci, support, resistance, market profile, and whatnot. I haven't found them to work consistently enough. This approach is consistent. So there won't be any guessing about where do I get out. The system will do the heavy lifting for you because all these strategies are predefined. And you will select the right one because it's rules based. It's based on the strength of the trend, which I'll explain how you determine that in just a few more minutes as we keep moving forward. But I will boil it down to just two approaches. Even though we have three separate exit strategies for three different levels of trend strength, untie my tongue there, it really boils down to, if it's a really weak trend, you're going to scalp. If it's a strong enough trend, you want to scale out like the example on the right. So you can stay with it after paying for the trade and you can relax and lean back in your chair and let the automation take over. And that's what scaling out will do for you. And that automated trailing stop, of course, as I pointed out, will adjust itself in real time. You'll get to see it with an actual trade. So this gives you the perfect combination that achieves the highest probability so that you can achieve what I think is the actual holy grail of trading. Consistency, not some rocket science stuff. Consistency is all we really want, right? So let's look at a symbolic example of a 9-minute uptrend. Okay, it's in a pretty strong uptrend. The 3-minute dominant cycle lives in its own little world. It's a subset, if you will, of the 9-minute. three times as many bars as there are in a 9-minute chart or in a 3-minute chart. But in this example, it's meandering slowly in a downtrend. Oh, well, they're not trending together. And the low risk surgical entry chart, the 1-minute chart, maybe it just started an explosive rally. Well, things are just a hodgepodge here. They're not really in sync. What you want is optimally something like that, but you're just not going to get that all day long whenever you are looking for trades. It occurs infrequently. This is why we have different exit strategies. So now is the time I'm going to give you something else that you can take and try on your own. This is exactly a takeaway from the course that I teach my own students. And by the way, just as I mentioned, and you'll find out at the end, it's a complete package. It's a course, it's software, it's all kinds of support tools, it's a trading room, and it's my personal coaching as a package. And one of the things that I do is I make sure that my students remember things easily. And here's a little rhyme to help you remember. It's a teaching mnemonic, and it goes like this. Best is if all three agree. That's the 1, the 3, and the 9, and that includes the tick charts. But if all three don't agree, then what are you going to do? Well, let's stay here for a little bit. The minimum is you want at least 2 out of 3 to agree. But if all three agree, you have the potential for a really strong price move. You don't want to waste it because you're going to probably get a lot of follow through. So you want an exit strategy that keeps you in the trade as long as possible. And that is scaling out. Okay? So when all three agree, you will want to scale out. Now, if only 2 out of the 3, which is more often, are trending together, and it's not just any 2 out of the 3, it's got to be the one you enter your trade on and the next higher time frame. So that would be your 1-minute chart, or if you're using a tick chart, it would be needing to agree with at least the 1 minute and the next higher chart above that, the 3 minutes. So at least the 1 and the 3 need to agree. Best is if all three agree. There is the rhyme. So if only the 1 and the 3 agree, well, you're going to get a price move that's worth taking if you get a setup, but it's probably going to be a weaker, briefer price move. So you don't want to stick your neck out. You just want to be able to get in and get out with your full position. No fancy dancy stuff, just a scalp. And that's all you need. Now give me a little bit of feedback and let me know if this makes sense to you. Did you follow the logic of this? Give me a yes if you did understand it. Or if you got a question, type it out. Let me know. Okay, thank you. Now, if we put all this together, what can you reasonably expect? Now, again, I'm not going to violate the FTC regulations, but I want you to know realistically, folks, no hype, what you can actually expect. Now, first of all, I gave an example using the indexes, S&P, Dow, NASDAQ, and Russell, and those are part of the family of markets called futures. Now, just so you know, again, I'm reminding you, this will work on the stock market, okay? However, in the stock market, if you want a day trade, you need a minimum account size of $25,000. So that leaves a lot of people out. If you really want to be able to have a very small account, I would highly recommend that you consider trading the indexes as a start. And you can trade the indexes on a per contract basis. And I know you've heard of that term before, because if you've heard of options, you've heard of contracts, right? Well, kind of like a share of stock is a unit of measure. Well, you have a contract in futures or commodities, but the world of futures is where we're going here. So the margin requirements are extremely small. All you need to trade a single contract is just $500 from your typical broker. Now, I want you to be trading a little bit more than that as far as how many contracts, because remember I told you you could scale out with one of the exit strategies, take off half your position. Well, you can't cut a contract in half. So you need at least two. So let's say you start with the minimum. Even if you have a big account, just for examples here, let's pretend you have a small account and you're going to trade anywhere from 2 to 4 contracts. All right, if you traded 4 contracts at $500 each, you could have an account with $2,000. Now, if you just opened an account with that much and one of your trades was a loser and it took you under 2,000, then you drop back to 3 because you don't have enough margin. So what I encourage you to do so you don't trade with your back to the wall emotionally is have a minimum account size of about $5,000. Is that a problem for anybody here? Is there anybody who couldn't trade with a $5,000 account? Let me know. Just type in if you can't raise that kind of money. Okay, great. So already everybody can start with at least this much. Now, in the emails, you might have noticed there was comments made that the TradeSafe system is capable of generating an average daily ROI, that's return on your investment, of around 2 to 4%. And I know that's created some conflict among people. They just flat don't believe it's possible. And I'm going to show you why it is. So here is how it is done. If you were to take every trade that the system gives you a signal for, now this would require you to be there for the full trading day, of course. You're not going to get these kind of results if you're only going to trade for 30 minutes, obviously. So if you traded all day long and you watched and took all the trades that you got a signal for, and you made this full time, you did it for the full week, you did it for the full month. Well, there's about 20 to 22 trading days in a month. At the end of the month, you take how much money you made. You deduct the losers from the winners, to be fair, and your net profit divided by the number of trading days in the month is how much your average daily ROI is. And it is invariably at least $100 to $200. And this is just for a single market. If you're following more than one market, it's going to be higher. So I hope that gives you a lot of encouragement. Now, where does the 2 to 4% come from? Well, if you divide the $100 or $200 into your account size, $5,000, that's 2 to 4%. Anybody got a question on that? Okay, so some people are saying, this is lunch money. I really don't want to just make $100 or $200 a day for all my effort. I need a lot more. Well, shoot, if you've got a bigger account, then you'll trade bigger size, trade more contracts. But if you're a small trader, no disrespect, we all start somewhere. But if you don't have very much in your account and you would love to build it up to where you could make more than 100 or 200 a day, especially if you're trying to leave a day job or something. One of you just typed, I'd settle for $50 a day. That sounds like someone who would love consistency, because that's what I've been saying all along. Consistency is what we all seek. And that's scalable. If you just made 50 a day, all you need to do is wash, rinse, and repeat and build it and build it. Now, yeah, exactly. I'm just responding to what he typed again. So how do you build up your account? Here is a safe and simple way to do it. If you started with a $5,000 account and you didn't take any money out, at least for a while, and you build it up until it reached $7,500, however long that takes, now you've increased it by a net of $2,500. You can afford to trade bigger size. So you're going to add a pair of contracts. So if you started with, say, 4 contracts with a $5,000 account, and that was a really good cushion there, by the way, to start with. Now you're at $7,500. And if you hold everything constant, it should take you a little bit less time to reach the next $2,500 of additional profit, and you're up to 10,000. Then you'd add another pair. So you'd be going originally from 4 to 6 and now to 8. And you just keep doing that and doing that. Now, there is a limit. There is no infinite liquidity in every market. That is going to top out depending on the market you trade. But you know what I think is going to affect you sooner than that? Your personal psychology. Because I'll give you just a brief share. When I started out trading and finally reached a level of profitability back in probably mid to late 90s, and then the E-mini contract first came along in November of 97, I was trading 50 contracts at a whack because I could afford it. But do you know what? When I had a loser, I was not a happy camper. That's a chunk of change. For some reason, it affected my personal psychology, my subconscious, if you will. And if I had another loser in a row, oh, then I was starting to feel really bad. It would have been hard to pull the trigger on that third trade, I can tell you. So I had to scale back and find a comfort zone for me. And even though I could easily afford 50 contracts, you know what my comfort zone is? 10. And you may say, well, you're not going to make much money that way, Michael. Yeah, but my peace of mind is more important. And it also is important to my being able to pull the trigger reliably. Does that make sense to you? Because we're factoring in the human factor, not just the so-called mechanics of trading. All right. Because a lot of people are going to say, okay, Michael, if we keep building this up and building this up, and you've told us that, you know, most people are emotionally not going to be able to trade infinite size, could your system just go to the moon? Yeah, I know theoretically it could achieve some absurd return on your investment. So let's just stop right there. No more hype. Let's take a look at what's, I think, much more realistic. Instead of 20 to 22 days, let's say that you cut it back to only 15. That's much more realistic. And instead of trading all day long, because we promised you that you could be a part-time trader, you would trade half a day. So instead of averaging $200 a day for 20 or 22 days, you would be trading 15 days at maybe averaging $100 a day. Well, that means by the end of a trading month, you would have netted out $1,500. Well, a $1,500 return on a $5,000 account is over 30% return, folks. And you know those hedge fund managers, they'd kill to get those kind of numbers in a year, let alone in a month. We've actually achieved this in our classroom in a single day, although that's few and far between. But if you're really dedicated, you can really turn out the numbers. That's the point. Because sure, I know we'd all love to have that kind of equity curve. It just ain't going to happen unless you do one thing first. You got to acknowledge we're not clones, because each one of us has a personality. I bet there's some of you are so aggressive you trade anything that moves. It's hard to control yourself. And then I bet there's got to be some of you out there that if you've had a loser, man, you just can't pull the trigger on that next trade. You get analysis paralysis. Somewhere between the two, most of us is where we fall. That's the point I want to make. You can think you can buy the stairway to heaven like the old Led Zeppelin song, but you can't. Because everybody that sells stuff for trading, they're overlooking the human factor, and I address it. Because what professionals do is they benchmark anything that they've created, their systems, to the trader themselves. And that is going to allow for your personality and the market you trade. So what the heck is this benchmarking thing? Well, When you go through my course, it's structured just like going to school. You know, you take a quiz, you go further, you advance, and you get better and you learn more and so on until you finally get to the point where before you graduate, you got to prove you know your stuff. And that's what benchmarking is. You go away from the trading room and on your own, you've got to have a statistically viable sample of at least 30 trades. More is better. And you're going to pick the ones that you want, that you're comfortable with. Now, they're all still going to show you the same signals, and you're still following the same rules as any other graduate from my course. However, the difference is you might want a trade that someone else couldn't bring themselves to pull the trigger on, or vice versa. So you're going to have your own independent track record, and then you will meet with me and we will reverse engineer exactly how you can consistently achieve that track record, which remember I told you earlier, I didn't have a single graduate for the past 4 or 5 years now that has achieved less than 87% winners in their own trades for a statistically viable sample of at least 30. And they are trades with full intentionality. They are trying to make money. They really want it to work. They're not just diddling around. What we do is we reverse engineer it because I've given them tools like a fully macroed spreadsheet in a journal so they will learn why and how each and every trade they had been taking, scores and scores of practice trades beforehand, why this trade worked, why that trade didn't work. Don't make the mistake like amateurs do and just jump from trade to trade. You need to analyze every trade after you finished it. That's what a professional does. Okay? So by the time you get ready for benchmarking, you will know from all that journaling exactly what you're comfortable taking and what's been working for you. So when you meet with me on the review, we're going to look in the spreadsheet and we're going to say, okay, which chart worked the best for you? Was it the 1-minute chart or one of those tick charts, regardless of market? And then we're going to find out which exit strategy worked the best for you, highest percentage of winners and or made the most money. And it might be scalping and it might be one of the two exit strategies called scaling out. That particular combination is going to be dialed into you alone. That's why benchmarking is so critical, and that's why I make it a condition for you to graduate. You must be benchmarked before you graduate. Does this make sense to any of you? Do you see the power and advantage of benchmarking? I know it's discipline, and some of you don't like to hear that word, but that's what it takes. Okay? All right. Thank you. So now that we've given you everything that leads up to what we want to show you, let's go to the charts. And I'm going to freeze my screen here for a moment and go to the charts. And I got one adjustment to make. Let me make sure it's there. All right. Now I'm going to bring the screen back. Type yes if you can see my charts, please. I need to know you can see the charts. And by the way, for those folks who came in late, I noticed some of you did. This will be recorded. I really, really strongly encourage you to watch the replay all the way from the beginning because this will not make sense to you unless you watched it from the beginning. Okay? Great. All right, let me give you a real quick tour of what you're looking at. Remember the rhyme, the 1 and the 3 need to agree, best as if all 3 agree? Well, here is the 1-minute chart and it's in a downtrend. See the downtrend color? Real simple. Here's the 3-minute chart right there. It says 3-minute and it's also in a downtrend. Now the 9-minute chart down here is not in a downtrend. So you may say, well, are we going to scalp? Well, I want to introduce you to the possibility of not just limiting yourself to getting in and getting out and making a quick $100 in a minute or so. I want to show you that you might be able to still scale out, but not stick your neck all the way out and try to take off half your position at some price level that maybe you couldn't reach. Maybe the market didn't have enough horsepower to get there. So we've got two exit strategies. One of them exits half of your position at $100 of profit, kind of like a scalp. And the other one does it at even smaller level, $50 worth of profit. So it's that much easier for you to pay for the trade. And then if it has more legs, you're still in the other half of the trade and the automation will trail the stop for you. So I'll show you how that's done when we start things up. What else is on here? Now, I believe it was Tom that asked me about tick charts. Here are the two tick charts right there. We're going to actually take the trade tonight on this 1 minute chart. It's going to be the same rules, the same approach as you would have done on one of the tick charts if you had a setup for a tick chart. Now, what are these other two little windows down here? Well, all these alerts, whether they're visible, like that, the color, or the audible alerts that I told you about earlier where your computer is talking to you, this is a log of all the alerts so that you know what's happened if you walked away. Maybe you didn't hear it. It shows you what happened. And right here, this is your data box. Wherever I put my cursor, it gives me the feed out, not the readout. Sorry, not feed out, readout. And it's not just the open, high, low, close. I've got some proprietary indicators that will walk you through whether or not the second, the third, and the fourth steps are fulfilled. So the first and most critical step to entering a trade-safe trade is real drop dead simple. Just look for trend agreement. We have it. So we've satisfied ourselves that we've got the first step done. It is not a question of ambiguity or subjectivity. It is or it isn't, right? Now, this is the chart we're going to take the trade on, so I don't need to be having all these other charts in my field of vision. That's a distraction. Let's maximize this window. Bring this guy over a little bit more. And now this simplifies our focus, and I'm going to introduce you to the second step. If the market continues on down past where it is right now, and it reaches a point where it retraces or pulls back a bit to where this moving average will eventually be, there are very specific conditions that need to be met. There need to be a certain number of bars in that pullback or retracement. And by the way, it's not a change in trend. It's just profit taking while in a downtrend. This is called trading pullbacks or retracements. That's as old as dirt. But the big difference is this is got precision. You will not have any doubt about when and where to actually get in, and you will have a much higher percentage of success. So let's say along the way, as this is retracing, kind of like a stretched rubber band building up energy, it wants to then snap back. But before it does, the last bar in the pullback, and I'll draw a little vertical line here so you can pretend that's a setup bar, that's going to be the bar that sets us up for the trade. And then when the third and fourth step are completed, and I'll show them when we get to them, we will then park a simple resting order underneath the low of that bar, one tick under it. I'll draw a horizontal line to represent where an order would go. And it would be a stop limit order because that eliminates slippage totally. That way you're in full control of the entry process. Now, we don't use indicators to put us in our trades because they lag. We use the actual market itself, the market action, to put us in the trade. So if this thing is going to snap back, we want to have a price bar trade through it. Now, it doesn't have to be the next bar. It could be a few bars later. But whatever it is, when it does that, that puts you in the trade. You don't have to be chasing the market. You don't have to have fast reflexes. All you got to do is just park this order, before this bar is about to finish. And then when the market does trade through it, that rubber band that has, just a minute, let's get the correct drawing tool, snap back, then you will ride it for all it's worth. That's it in a nutshell. Any questions on the fundamentals before I turn on the trade and we do it? Start typing while I erase this if you've got any questions. All right. Now I'm going to turn this on, and I've already preloaded an exit strategy so that when we do get a setup and get into the trade, it's going to scale out half of its position at a $50 profit target. And then the other half of the position is going to trail with a profit stop. Now I'm going to speed things up to about 8 times normal speed so that we don't wait here all evening. And we haven't had the pullback yet. It's waiting to start doing that. Okay, it looks like it might want to start doing that. I'm going to speed it up to 10 times normal speed. Okay, it's beginning the retracement. See it come back? Notice it's at a direct 45 to 90 degree angle. That's
9-minute breakout reset.
okay. I paused because the computer was talking, telling me about another chart that was doing something, but that's irrelevant. Okay, we are almost done here. Now I'm going to slow it down right now to normal speed and pause. All right, we've got the counter down here in the lower right hand corner. It says there's 15 seconds left on this 1 minute bar. I paused it so you can follow along. So notice the direct angle. You do not want a meandering type pullback. And there are a minimum number of bars that need to be in the pullback. It can't just do it in a single bar, for example. All right. Now, all of these are, of course, rules based. It's covered in the course, but this is the furthest bar in our setup. It's the furthest one in the pullback. Now, how do I know that it's actually touching the moving average? Well, you can see it, but what if along the way it didn't reach it? Maybe this would have been the bar that we would have been seeing, and we would have said, is that far enough maybe to get the same result? Does it need to touch the moving average? Actually, it doesn't. If it comes within a certain number of ticks or even overshoots and it's above it, but it's still within a certain number of ticks below, that sweet spot, that zone of influence is acceptable. Now look in my data box here. And if I put my cursor on this bar, which is not our setup bar, look in the bottom of the data box and it says Rule 21 and it has the number 3. It's saying that the part of the bar that's closest to that moving average, the top of the bar, is 3 ticks away. All right? Well, if that would have been close enough, and I'm not saying it is or it isn't, I would have parked an order below its low, and I would have seen if the market would have come down and put us in the trade. But no, another bar went further. And if another bar went above this bar's high, it's the new candidate. I would have had to have canceled that order. And I would have done the same thing a second time with this bar. Any questions? Are you following along? Good. So what I'm going to do is turn this on, and I'm going to wait until the final 3 or 4 seconds, which is right here on the counter. You can see that. And I will pause it again, and then I will show you how you place an actual order. So here we go, letting it count down, 13, 12, 11, and so on. Excuse my sniffling. And I'm going to pause it. Now, when I put my cursor on this bar, the readout says 0. Well, it's touching. It doesn't even have to get closer. It's as close as it's going to get. So it's satisfied the second of the 4 steps. What is the third step? Very, very simple. We all know what oscillators are. We've heard of CCRs and stochastic and RSI and that whole family, right? Well, I'm not saying what this red line is, but it's one of them, and it's been reprogrammed with different settings to give you a much more aggressive condition. Plus, it has different settings for overbought and oversold than stock. Notice it's gotten overbought. That's all you need to satisfy the third step, folks. It will not be used to put you in the trade. I've already gone on record as saying we don't use indicators to put us in the trade. We park an actual resting stop limit order to do it. So once we've actually gotten into overbought territory, that third step, that condition is met. No ambiguity there, total precision. Final step, and now is when I talk about the risk levels that the trade safe system can keep your risk really, really small. If you've ever traded the minis, you know that a lot of times if you have too small a risk level, you get stopped out really frequently. Of course, I don't know what approach you're taking and how much you're losing, but if anybody here has ever traded the minis, would you just type a quick Y? Just type Y really quickly and let me know. Nobody? Oh yeah, there we go. At least one person. Tom has. Now, the risk is not on the full trade basis because I don't know how many contracts each trader is going to be trading. The readout is going to show you the risk on a per contract basis so that if you're a small trader, you know what it is. If you're a big trader, you know what it is. Right here, it says risk. So if I put my cursor right here with 4 seconds to go, now that bar could grow bigger. The risk is only $45 per contract. You may say, well, that's too tiny, Michael. You're going to get stopped out. Here's why I won't. Remember when I said it's going to snap back and keep going down here? Suppose it doesn't keep going very far. It only goes a little bit and doesn't hit the target. Once it's gone at least a couple of bars or so, this last bar in the pullback becomes what's called a pivot or a swing, just like this right here or this in V-shaped bottom here, that's a pivot or a swing. Well, that swing low, that's a support level. This setup bar after you're in the trade leaves behind a pivot that becomes a resistance level. And Technical Analysis 101 tells us that if you're in a downtrend and price trades back up through that resistance level, you're not in a downtrend anymore. You're in an uptrend. So logically, that's where you want your stop to be, is one tick above that bar's high. I'll show you once we're in the trade how it's done. So we're going to enter the trade one tick under it, and once the trade starts, we're going to make sure our stop is one tick above it. The distance between the two in dollars is risk. Does that make sense? Give me a yes if you're following along. And if you got a question, be sure and type it. All right, so what I'm going to do is show you how we park an order. Now, the platform that I'm using right here, and I haven't said anything about it so far this evening, is NinjaTrader. Now, a lot of you use Thinkorswim or TradeStation or other types of platforms. First of all, I need to make something really, really clear. If you want to succeed and not be low on the food chain, you're competing against professionals. If you want to be in that top 5% that are consistently profitable, then you need to use professional tools. I regret to inform you that Thinkorswim is not a professional day trading tool. It's perfect for options, but its day trading capabilities were grafted on as an afterthought years ago. So, with all due respect, you need a professional platform. Well, what about TradeStation? Well, it always was a professional platform, but when the Japanese bought it from the Cruz brothers years ago, they stopped advancing it. it is not kept up with the technology. It's 20th century technology, and we're in the 21st century. So I wrote my program for NinjaTrader, which is a very easy platform to use and has maximum capability for programming these kinds of results. And I already got feedback from some of you saying, Ninja for me. Yes, I got it. Okay. So my cursor is now parked one tick underneath the low of that bar. Why did I do that? Because instead of using a DOM, depth of market, which is simply an ascending and descending column of numbers for the bid and the ask, not terribly intuitive, and you got to take your eye off the ball and all that, and that's old-fashioned. You want to be able to park your order directly on the chart. That's the way to do it. And how do you do it? You right-click. I know that's a lot of menu stuff, but all you're going to focus on is just this one group always. It'll be in the same place every time, and it's always the last choice. You're going to choose the last of these four every time. In this case, it's telling you to sell. It's a downtrend. It's a stop limit order, and we said 4 contracts, and there is the price level. So I'm going to left click, and I'm going to turn up the volume. I hope you can hear the volume loud enough when I do it. Your computer will talk to you, so here we go.
Order submitted.
Okay, you should have been able to hear the computer talk to you. There is a graphical representation of a resting SLM stop limit order, sell 4 contracts. And if you change your mind before you're in the trade, you can kill it right here by clicking the X. Any questions? Type them out. Otherwise, I'm going to turn this on and let the market put us in the trade. So I'm going to speed it up a little bit.
Order filled.
Order filled, and pause it. Now, automation has already, whoops, just lost it. Automation has already kicked in, folks. The original line that was under the setup bar right here, you can see this next bar did trade through it, right? Up here is our stop loss order for the maximum that we're allowed, $100, right? But we said that you really want to, for a logical stop, to park it one tick above the high of that setup bar. So all you got to do is just drag it down and click. You're done. Now, what is this other line? That's your target. The target for scaling out of half of your position. So if we're going to hit $50 of closed profits, we got to trade through that. Now, more automation is taking place. We got these 2 lines that were placed these orders automatically for you. And if you're in a fast market, you can't keep up with that sort of stuff. That's why you need it programmed. We have these 2 tied together in what is called a bracket order, an OCO. One cancels others, so that if it didn't quite reach the target and make some money, and instead it turned around and went and hit the stop loss order and you lost $45 for each contract, well, guess what? Years ago when I was a beginning trader, I forgot to cancel out an order that was resting in the market. And I woke up the next day, I was $4,000 underwater. It freaked me out. And you would be too. So this is programmed in to protect you. If this is hit, this one is automatically straight canceled. That's an OCO order. Okay? Now, something else is going to take place. If we touch this line that represents the target, it's a limit order for taking profit. Now, the exchange says it won't guarantee a fill unless you trade through it. So if it just kisses it and backs away, that line may still be there and you won't get a fill, and you could go all the way back up here and get stopped out. And that's real frustrating to have a potential winner turn into an actual loser. What if I told you that I've got something programmed in that will hedge your bet? If it manages to at least get to here, the algorithm is going to cancel and replace your stop loss order and move it to where you entered, break even, plus 1 tick of profit. That way, you will make at least 1 tick for each of the 4 contracts at $5 a tick. You would have made at least $20, and that would have paid for all your commissions and still have extra money to put into your account. Maybe not as much as you wanted, but it sure beats the heck out of having a loser, doesn't it? So that's programmed in to cut down on the losers. So let's see what happens. I'm going to turn it back on. It's at 3 times normal speed. I'll speed it up a little more.
Target filled.
Target filled, and I'm pausing again. And the green line disappeared because we did go through it. And you see how the red line representing our stop loss order got canceled and replaced and moved to here, 1 tick under where we entered into 1 tick of profit. So it's not really a stop loss anymore. It's actually a profit order. So more automation took place. It's not 4 contracts because remember, we scaled out of half of our position. 2 of the 4 contracts are gone. You've made $50 in closed profit. You've got a paid for trade. You should be happy. Right here, it says 2, not 4. So it canceled and replaced it 1 more time and simply kept the location, the price position, but what it did was it instead changed the number of contracts. Very cool. You can't do that in TradeStation, by the way. Now, how do you trail a stop? This is our trailing stop indicator. It is obviously a parabolic. I have repurposed it and reprogrammed it completely from what it used to be so that it behaves very differently than a normal parabolic, because when Wells Wilder created it in 1978, it was meant for you to always be in the market. Every time it was touched, you changed your position to the other direction. Well, if you used it that way nowadays, you'd lose money. I repurposed it for a trailing stop. So let's turn this back on and let it go through that so that it flips around to the right-hand side of price action, because that's where, there it is. See, now it's up here on the right-hand side of price action. Now that it's up here on the right-hand side, we're going to completely connect this actual stop to the indicator. It's a real simple menu-driven thing. You just attach it to the indicator. Come on. I'm going to select which one it is, and I'm going to actually give it an offset.
3-minute congestion canceled.
Okay, my computer's talking to me and telling me that the 3-minute congestion that might have occurred a long time ago, there's no chance of congesting again. Okay, look, these dots are now catching up with the stop loss. Well, it's not a stop loss, it's a profit stop. Now watch, after every bar finishes, now I'm on fast forward, I'm at 8 times normal speed, but normally every 60 seconds, one of these dots will appear, and this line is got a 2-tick offset. The reason I do that is I found that quite often price will come and touch that trailing stop indicator and then keep going. I use an offset to keep you in the trade longer. So notice that it's hanging back and it's adjusting itself like a surface-to-air missile, adjusting its rate of closure and trajectory. And if things start to go sideways or even backfill.
9-minute breakout.
Okay.
9-minute breakout confirmed.
Okay, you're still hearing other charts giving me alerts that I'm not concerned about because I'm in the trade. Now, we're giving plenty of breathing room, but now that it's going sideways, notice how close that it's getting. Closer and closer. Now ask yourself though, would you have jumped out of the trade at any point? Because your experience has told you it can't go any further, or I can't stand the suspense, or whatever it is. Well, you'd have probably left some money on the table, like right here. It touched that. But what we really want is for it to be reassociated, because we've got the offset. So I'm just going to reconnect it again. No worries. And watch it. It'll keep moving after the next bar. It'll drop a little bit lower. Once the dots drop, it will drop with the dots. See that? Just a little bit lower. We're kind of going sideways here, but it's keeping that 2-tick offset. And then suddenly, despite what you might have thought was, yes, this is an ATM exit strategy, Satish. I created it myself. I've got 3 separate ones. Be sure that you watch the replay all the way from the beginning if you missed the beginning, because I covered stuff like this. All right, now we're starting to head back closer to where the trailing stop is. So let's see if that adjusts itself lower and lower to lock in profit until finally maybe we'll be out of the trade. And we'll see what we get here. And maybe there's more. Maybe there's more. You never know. It's always a pleasant surprise to me when I think, oh, it can't go any further. Price is definitely overextended, and then suddenly it goes another few $100s. And it sure looks like it's dropping even more. Oh, son of a gun. Okay. That would have been where myself, I would have thought, oh, now it finally.
1 minute. Trend lost.
Okay, and by the way, watch this. In the bottom right corner, it'll go into congestion.
1 minute. New congestion.
See, I paused it. It's now in congestion. We've lost the trend. So it managed to get more than just the meat off the bone. It took you from up here, paid for the trade, and kept you in the trade until it lost the trend by going into congestion. And notice it was the trailing stop that took you out right there where that diamond is. How much did it make? Well, let's go to the hidden panel that shows your profit and loss. It might be covered up by your GoToWebinar application in the top right corner. You can always slide it out of the way. But if you don't want to do that, I'll tell you, it says it made $820. So Satish and Tom and all the others who've been typing and paying close attention, tell me frankly, would you really like to have the kind of precision that guarantees you a precise, repeatable, consistent entry and then gives you all the automation, even in a fast market, to take over the trade? And it's always going to be adaptable to whatever the strength of the trend is instead of a one-size-fits-all. If you like all of what you've seen here, give me a yes. Just give me some feedback and let me know that you think that this is definitely something that you would really like to have. I sure do hope so. So while you're typing, very nice, says Tom. Okay, so I'm going to go back to the presentation and we're going to wrap things up here shortly. And yes, Satish, I know you came in late, and that's quite all right. I will be sending out a link to the replay, as well as a link to schedule some consultation time with me so you can get all your questions answered, so you don't have to think, okay, I'm finally getting to watch the whole thing, but now that I'm watching it, I don't understand some of it, and I missed my chance to ask Michael. So yes, you can. You can actually talk to me, and I won't turn it into a sales call, I promise. I won't twist your arm, in other words. All right. So, folks, we've just finished looking at a sample trade, and now let's do a recap on what is the trade safe system. It's a trend following system, and which is, I believe, the safest and most profitable and consistent way to make money in the market these days. And it does it because we utilize something called cycles-based time frames or chart settings, not just any one from a drop-down menu, but carefully calculated based on what market you are trading. And that enables you to tune these settings so that you get that wide angle view down to the low risk surgical entry, so that you will then be able to determine strength of trend. Not just do you have a trend, but how many of those time frames are trending in the same direction. And that's what's going to inform you as to how you want to manage and exit your trade. Or, as Satish asked, is it an ATM? Yes. I have 3 pre-programmed automated trade management exit strategies, and I just demoed one of them to you. Okay? So this allows you to adapt to whatever the market is capable of giving you. And you saw the low risk on that trade. It was only $45 per contract. If it's over $100, you don't take the trade. That keeps your risk levels very, very small. And because they're logical stops, as I explained earlier, you're not going to get stopped out that frequently. And how could you be? If being benchmarked, as I told you earlier, 87% winners is what every single graduate from my course has achieved in the last 4 or 5 years. Every one of my graduates has achieved a statistically viable sample of 87% winners. You got to see the automation in that live trade there. And as I walked you into the 4 steps, getting into the trade, you saw how, like a flow chart, it's Boolean logic. It's a mechanical trading system, a true rules-based mechanical system, not what some vendor calls a system, and it's not. They're just using marketing hype. It has true precision from start to finish. First step, trend agreement, and it'll both show it to you and it'll tell it to you. Your computer will tell you which market, which chart, what its trend status is, whether it's in congestion or whether it's trending. Once you've determined how many of those charts are in trend agreement, that will dictate your exit strategy, and then you are looking for the second step on the chart you want to take the trade on. That's a pullback or retracement. And you don't want to put all your eggs in one basket. You know that, right? You instead want to be able to have independent, uncorrelated confirmation, and that comes from the oscillator that simply needs to be overbought or oversold. And then finally, let's keep that risk under tight control. If it exceeds the maximum that the system allows, you just don't take the trade. This is a rules-based system. You follow the rules? Oh, Tom wants to know, and I'm happy to answer your question. Tom says, why didn't I mention the ES, which is the symbol for the S&P Mini? I started out on the ES because that was the first actual electronic contract back in 1997, and I loved it. But by the year 2000, so many people were trading it. It had so much volume and liquidity that the institutions moved in, Tom. And the institutional presence has wrecked the ES. It does not trend smoothly. It tends to have a lot of spoofing. You get stops gunned a lot. It is just not worth trading. I mean, I can trade it, but I would much rather offer you markets that are too small for the institutions, like the Russell, the NASDAQ, and the Dow. Does that make sense? Just give me a yes or a no. So, folks, if you follow these 4 steps, you know what's going to happen? Real consistency. And as I mentioned earlier, you're not just investing in software. You are getting a complete roadmap to guide you to being a consistently profitable trader. And I'm not going to walk you through all of this, but you get a full 90 days of my personal coaching support. Now, does it take 90 days to learn? Heck no, I taught an 8-year-old kid how to do it in under a week. So yes, you can do it in a short amount of time, but I prefer, because it is self-paced, that you take your time. Be in my trading room. Let me watch you take trades. That's right. In my trading room, you're not competing with hundreds of other people. There's maybe going to be 6 or 8 people. That's it. This is a very selective process. And you're not going to have to type questions. Instead, you use a headset with a microphone, and you can talk to me anytime you want, even in the middle of a trade, and say, why did you do that? Because this is not just a trading room. It's a coaching environment, an educational environment. My goal is to make sure that you thoroughly understand it. And to ensure that, I might share your desktop and watch you take trades to ensure that you thoroughly understand it and that you're doing it properly. Nobody else in the entire industry does that. And yes, Tom, the NQ has been very volatile, and that's why we use the tick charts. Remember what I mentioned earlier about the volatility, that it's too much for a 1-minute chart sometimes? We defer to the tick charts at those times. So I understand. But remember, you still have 2 other markets. We give you more than enough markets to get setups on. My point is that by the time you graduate at your own rate, you've been benchmarked, you'll have an official track record, you've gone through the course, you'll have all the tools you need to be a professional trader so that you really can consistently start taking money out of this economic explosion. And I don't understand what you're saying, Satish. How to trade the NQ volatile. I already addressed that. I said we use tick charts because they are much smaller risk. Okay? Call me. Schedule time with me, Satish. Believe me, you will be much happier getting all your questions answered that way. And I promise no pressure. Okay? So let's go ahead and show you everything that's included in the package. Now, I mentioned that a lot of people call what they offer a system. There are actually real systems out there, not just mine, but there aren't many of them, maybe 6 or 8 of them, last count, but they price them pretty high. The cheapest one I've seen is over $3,000, and they go well past $10,000. So don't worry, I'm not going to ask you to pay anything like that. So if even I did price what I'm offering you at the low end of the scale, it still beats the other systems. And it would be worth it. You'd be making your money back in short order. But to make sure that you can do it, you want me in your corner as your personal coach. Now, I consult occasionally with corporate clients and I bill at $500 an hour, and I get it. You get me for the full 90 days. Now, by the way, you may ask, oh, what if I run out of time? Maybe I got interruptions, or I'm a slow person or whatever. Am I just SOL because I can't get it done in 90 days? Don't worry. I offer what's called extended support. You get all the same personal coaching. And by the way, everything other than my personal coaching, the system, the software, the access to the support desk, everything else, it's yours for life. I don't charge you a penny to keep using it, okay? But if you want my personal coaching in the trading room or offline, see, it says offline, I do that. Almost nobody else. In fact, I don't know of anybody that lets you talk to them outside of their trading room. You can schedule time with me privately for any personal consultations you want, as much as you feel you need. Now, what about that extended support I was going to talk about? You can do it on a month-to-month basis for only $47 a month. I'm certainly not getting rich at that. I'm only offering it just that way so that you can continue with your coaching if you feel you need it. A lot of graduates love it because they love the community aspect of being in the trading room and being able to ask questions and talk to each other and things like that. Okay? Now, I have a full-blown password protected members area. It's got a special course properly designed with content that's both text-based as well as video. And this will help you get off to a good solid start to at least learn the basics. And then you would start joining me in the trading room. But you will, of course, want to install our software. So the actual workspace and the charting templates themselves, so you don't have to reinvent the wheel, that's a 5-minute installation process. But if you are intimidated by that sort of thing, don't worry. I have a full-time support desk, Zendesk, and he can remote access into your computer and they'll help you get the job done. Now, you watched the trend indicator as it demonstrated when you have trend or no trend or congestion, and it also is audible. You heard the audible alerts in the background as I was going through my trade, and that's included, of course. You saw all of the separate indicators that gave you the precision as to whether each condition is being fulfilled before you pull the trigger on parking an order. And once you were in the trade, you saw the fully automated exit strategies. I demoed one of them to you, scaling out at $50 of profit and then trailing a stop. I mentioned benchmarking several times already, but what I didn't tell you was that during those 30 or more trades, my average student, while they're achieving about 87% winners, trading just 4 contracts, they average around $3,000 to $5,000. So that gives them a whole lot of confidence that after graduation, they'll keep right on doing that. So I want you to know that's what you can reasonably expect. Now, while you're in my coaching room, I record everything. What you see on my screen, your charts, if I make you show me your charts and share your desktop, or anything I say or you say, it's all recorded and archived. I've got stuff going back years. So if you want to, you can go back as far as you want and soak up all of that knowledge, okay? So I mentioned earlier that in order to really cut it, you don't want to be low on the food chain. You want to be able to compete against the top 5% who are the professionals. That means you want to run this thing like a business. I give you an actual business plan to map out not just your goals, but also to put guardrails on your trading, because I already mentioned too many traders jump from trader to trade to trade to trade, and they don't learn anything. You've got to say, what am I going to do if I lose X amount of money? Put a maximum in that business plan. How about for a day or a week or a percentage drawdown, things like that? Or what do I do if I get X number of losers in a row? Maybe I get up to 3 losers in a row, which is very infrequent. But if I hit that, what am I going to do? Am I going to dig a deeper hole, or am I going to stop for the day? You must put it in writing and submit your business plan back to me. It's a simple PDF Acrobat file. You just type it in the fields and return it to me. And I review everybody's business plan and give them feedback. Then, so that you stay on track, to track your stats, it's macroed. It's going to show you how well each chart is performing, how well each exit strategy is performing, how you are doing overall. It's not just profit and loss. It really gets granular. It's what we use to break it down for the benchmarking so that we can reverse engineer your performance. And then, of course, all along in the course and for the rest of your trading career, you want to journal each and every trade. It's a pre-formatted journal. I give you both a hard copy version in a PDF format, as well as you can capture it in the spreadsheet. So you have a choice. Now, last but not least, and I mentioned at the beginning of this presentation that before I started being a professional 30 years ago, I was a psychotherapist, and I know how critical discipline is. I include a very, very powerful technique that will neutralize self-sabotaging behavior so that you won't overtrade, or you will be able to overcome analysis paralysis. This technique is extremely powerful. Plus, you can use it on anything, not just trading. You can use it on, well, I'm not going to go into that. But look what we've just now shown you. Nearly $11,000 worth of value here. Okay, you know I'm not going to ask you to pay anything close to that, right? So normally what I do charge, and I have had people tell me that $39.95 is cheap. They made it back very quickly and I should be charging more. Well, I'm not going to ask you to even pay that tonight. In fact, I'm not even going to ask you to do anything tonight. I'm going to give you a limited time special offer, not $39.95. I'm going to slash it in half, $19.97. And instead of making you make a decision tonight, I don't want you to feel any pressure. I hate pressure. You can take a full week until midnight of next Wednesday Pacific time to make up your mind. Now, between now and then, to help you make up your mind, you need to know if you're ready to get started and if you even qualify. You should talk to me. And as I promised you, I'm not going to pressure you in any way, shape, or form. You can feel that this is a nice, relaxed conversation. And by the way, if you're still put off by that $19.97, knowing you could fully well earn it back very quickly, I have payment plans to help spread it out. I'll go into that in just another minute or two, so bear with me. So you're going to get a full week to do your due diligence, schedule some time with me, and then that way you can decide for yourself if this is really a good fit for you. Now, if you want to jump to the head of the line and you don't want to wait for that email to get that link to scheduling time with me, you can write this down. Here is the link, daytradesafe.com/apply now. And that lets you schedule time with me. Okay? Now don't go do it right now because we only got just a wee bit more to go. So what does happen once you do visit with me? First of all, don't hesitate. Book your call because these slots fill up really fast. Now, if they do fill up and it's already past the midnight deadline of next Wednesday, you're not out of luck. As long as you do schedule some time with me, you will have locked in the discount because that was your good faith effort, and I'll honor that discount. So I'm going to do the right thing. Now, you will have to call me. I don't call you. You'll get reminder emails and you'll get text reminders. So provide a cell phone number so that you can get text reminders. And this will be a really valuable conversation so you can get all your questions answered because I really want you confident at the end of that call so that you'll know if this is really for you. Now, payment plans. Is there anybody here who is not a U.S. citizen? If you're not a U.S. citizen, type in real quick. Otherwise, you are eligible for getting the equivalent of 6 months of time to pay them back. PayPal has the same as cash loan that they will make you. It's a 2-minute soft credit check that they will let you, because the credit cards won't do this, you'll be paying interest as you wait and pay and pay. But PayPal will give you 6 full months, and as long as you pay them back the full amount by the end of 6 months, they won't charge you a penny of interest. Essentially, you got the use of free money for 6 months. And that way, you will have by then graduated from the course, started earning money, trading real live, and you will be able to pay it off that much quicker. So I encourage you, when you do finally do check out the sales page, look for the PayPal same as cash option. Check it out. You have nothing to lose. And if for some reason it's not a good fit for you, I do have other payment plans available. But I would have to charge you some interest, of course, because I am assuming some risk. So we do try to make it as easy as possible for you to be part of the TradeSafe family and start using this new technology. So please book me a call. discuss it in detail. Here's the link again, daytradesafe.com/apply now. Pick the best date and time. It fills up fast. You won't be pressured. And do take some time, like I've told Satish to do. Watch the replay at least once, even if you watch this all the way through tonight. Watch the replay at least once to refresh your memory, because I can't recreate the webinar in a phone call. Okay? So there is always one person, maybe they've already seen this presentation before somewhere else, one person who says, I don't need to talk to you, Michael. I really know this is going to be for me. Can I just kind of skip over all of that talking to you business and the emails? Can I just go straight away and buy it? Yes, you can. Here is a link that'll take you directly to the sales page. You can write it down, daytradesafe.com/I want in, and that's all one word, I want in. So I have time for one final question before I let you go, because we did run over, and I super apologize for taking so long, and I am very grateful for your attention all this evening. So let's see, Tom is asking me which tick charts am I using for the NQ. I don't give away the settings for my indicators or my other charts unless you are in the course, Tom. Okay? But anybody else have another question? Any questions? Final question. Make it quick, because otherwise I want to say thank you. Yes, thank you. Someone thanked me. I'm thanking you back. Thank you very, very much. There's that link again for scheduling time. Be sure and do it. Get that consultation. And I want to say thank you so very much for joining me this evening and learning how a true mechanical system can actually bring you the real consistency you've been really seeking in your trading, folks. So enjoy the rest of your evening and trade safely. Bye-bye.